Hey everyone, welcome back. We're going to be taking a deep dive today into the PantheonAI Morning Briefing from January 8th, 2025.
Sounds good.
And it seems like Wall Street is having a rough morning.
Yeah.
A little bit of a rough start to the day.
Definitely a tense day.
Indices are down.
Yeah.
Even crypto, which is usually pretty resilient, is feeling the pressure.
The Nasdaq in particular is taking a hit, and that often signals broader concerns about the tech sector as a whole. What really jumped out at me in the briefing was Blackrock's advice.
Yeah.
They're suggesting investors look beyond traditional stocks and consider diversifying into alternative assets.
I will admit, when I first saw alternative assets,
Yeah.
I thought, is that code for something super complicated?
Right. It's not about rocket science.
Yeah.
It's about spreading your risk.
Okay.
So think about things like private equity,
Right.
real estate, or even things like fine art and collectibles.
Wow.
These assets don't always move in the same direction as the stock market, so they can help cushion your portfolio when things get bumpy.
It's like having a backup plan
Exactly.
for your investments.
Uh-huh.
So BlackRock is also suggesting we look into defensive sectors.
Yes.
And those are the ones that tend to hold up a little bit better during economic downturns.
Exactly.
So things like consumer staples or healthcare.
Right. Think of those essential goods and services that people always need regardless of how the economy is doing.
Right.
So when investors get nervous, they often flock to these sectors
Yeah.
because they offer a bit more stability.
So if we're connecting this all back to BlackRock's advice,
Yeah,
it seems like they're saying, hey, things are a little shaky out there.
precisely.
Let's not put all of our eggs in one basket.
Diversification is key, especially when the market is sending mixed signals.
Yeah.
And speaking of mixed signals, the briefing also pointed out a little uptick in oil prices.
Yeah, I noticed that too.
Yeah.
It seems oil prices rose slightly because of a reported drop in U.S. crude inventories.
Yeah.
Why is this little blip important?
Well, it highlights the delicate dance between supply and demand.
Okay.
Even a small dip in supply can have a ripple effect on prices,
Especially now.
especially with all the geopolitical factors impacting global energy production right now.
Yeah.
It's a good reminder that even as we move toward renewable energy sources, oil still plays a major role in the global economy and influences inflation, which affects all of us at the grocery store and the gas pump.
Makes sense.
Yeah.
And speaking of interesting moves in the business world,
Yeah.
the briefing mentioned Novo Nordisk,
Right.
the company behind the weight loss drug Ozempic.
Uh-huh.
They've actually expanded their AI deal after a trial for their new weight loss drug didn't quite pan out as they had hoped.
This is fascinating to me because it shows how companies are using AI not just to improve existing processes, but to adapt to unexpected challenges.
Interesting.
It seems like they're looking to AI to potentially accelerate their drug development process and analyze data in a way that human researchers might not be able to.
It's like they're saying, okay, we need a new approach. Let's bring in the AI brainpower.
Yeah.
It makes you wonder if this is the future of pharmaceutical research.
It's definitely a trend worth watching. AI's potential in healthcare is huge.
Yeah.
We're already seeing it in diagnostics and personalized medicine.
Right.
And now it's making its mark on drug development.
Wow.
This could be a game changer for how new medications are discovered and brought to market.
So we've talked about stocks dipping alternative assets,
Mm-hmm.
a little oil price bump,
Yeah.
and AI shaking things up in the pharmaceutical world.
Yeah, it's...
What else did this briefing have in store for us?
Well, let's talk about something that's probably on a lot of minds right now.
Okay.
The housing market.
Uh-huh.
The briefing gave us some mixed signals here.
Okay.
U.S. mortgage applications dipped overall,
Okay.
but there was a slight increase in refinancing activity.
That is a bit of a head-scratcher.
Yeah.
What do you make of those conflicting data points?
Well, the dip in mortgage applications overall could suggest that rising interest rates are making home ownership less affordable for some.
Okay.
However, the increase in refinancing could indicate that some homeowners are taking advantage of the current rates to potentially lower their monthly payments.
Right.
Maybe even tap into some of their home equity.
So it's like two sides of the same coin.
Right.
Some folks are holding back while others are trying to make the most of the current situation.
Yeah.
What does this tell us about the bigger picture for the housing market?
It's hard to say for certain, but it definitely suggests a level of uncertainty.
Cool.
Factors like inventory levels, location, and of course, interest rates are all playing a role.
Right.
Both buyers and sellers need to carefully consider these factors before making any big decisions.
Solid advice.
Thanks.
Now, before we move on to the global landscape,
Uh-huh.
let's circle back to the Nasdaq's rough day.
Yeah.
It seems tech stocks are facing some headwinds right now.
Yes, and that's largely due to those rising interest rates we've been talking about.
Okay.
When interest rates go up, investors tend to shift away from growth stocks, which are often associated with tech companies.
Can you break down why that is?
Sure.
Why are rising rates bad news for growth stocks in particular?
Growth stocks are often valued based on their future potential, their expected earnings down the road.
Okay.
But when interest rates rise, the cost of borrowing money increases.
Right.
This makes it more expensive for those high-growth companies to fund their expansion plans and can impact their future profitability. So investors get a bit more cautious and look for safer havens.
Makes sense when you put it like that.
Yeah,
But it's not all doom and gloom for the tech sector, right?
absolutely not.
The briefing highlighted some areas that are still attracting investor attention.
Companies focused on AI and green tech are still generating buzz.
Okay.
These are seen as long-term growth areas that are shaping the future, and investors are betting on their potential even amidst the current market volatility.
So it's like a tale of two techs.
Right.
Some parts are struggling while others are thriving.
Exactly.
It's a good reminder that even within a single sector, there can be winners and losers.
It all comes back to those underlying trends and understanding which companies are positioned to benefit from them.
Well, I think we've covered a lot of ground in this first part of our deep dive.
We have.
From jittery markets to AI shaking things up. We've unpacked quite a bit from this PantheonAI briefing.
And it's clear that there are a lot of moving pieces right now.
Yeah.
But despite the uncertainty, there are also some interesting opportunities emerging.
Absolutely. And when we come back, we'll shift our focus to the global landscape and explore how events on the other side of the world might be impacting our investments here at home.
Sounds good.
Don't go anywhere.
And we'll be right back.
And as we broaden our horizons to the global stage, things get even more intriguing. Remember the briefing mentioned those geopolitical tensions brewing in Eastern Europe?
Oh, yeah.
Well, those ripples are definitely making waves in the markets. It's like that saying, when America sneezes, the world catches a cold. Except in this case, it feels more like the world has a bit of a cough and we're all feeling a little under the weather because of it.
Exactly. The world is so interconnected these days that what happens in one corner of the globe can have a direct impact on our investments right here at home. It's a delicate ecosystem.
Yeah.
And speaking of global players, we can't forget about China. The briefing highlighted some economic data coming out of China that has investors a little on edge.
Right. China's such a powerhouse in the global economy. Any slowdown there could have a domino effect. So what's the takeaway for the average investor who might be feeling a bit overwhelmed by all this global uncertainty?
Well, it reinforces the importance of staying informed and not making impulsive decisions based on fear. Keep an eye on global news. Try to understand how different economies are intertwined, and don't be afraid to consult with financial professionals to get personalized advice.
It's like we always say, knowledge is power. The more you understand about the forces at play in the market, the better equipped you'll be to navigate the ups and downs. But hey, it's not all doom and gloom on the global front. The briefing did highlight some sectors that are still attracting investor interest, even with all the geopolitical noise.
Absolutely. We already touched on AI and green tech, but the energy sector as a whole is undergoing a fascinating transformation. Despite the short-term focus on oil inventories, there's a clear long-term trend toward renewable energy sources.
It's like we're watching a changing of the guard in the energy world. And for investors, this means there are potentially huge opportunities to be found in companies that are leading the charge toward a more sustainable future.
Exactly. Companies that are investing in solar, wind, and other renewable technologies are likely to see significant growth in the coming years. It's a sector worth keeping a close eye on.
Speaking of sectors worth watching, the briefing also touched on the financial sector. Banks are always a key indicator of economic health. And it seems like they're facing some interesting challenges right now with rising interest rates and all the regulatory changes happening.
That's right. It's a bit of a paradox for banks. On one hand, higher interest rates can be good for their profits in the short term. But on the other hand, there's a lot of uncertainty about how the Federal Reserve's monetary policy will unfold. Plus, there are always those lingering recession fears lurking in the background.
So it's a bit of a tightrope walk for banks. They need a strong economy to thrive. But too much uncertainty can make investors nervous. So for those of us with money in the market, what's the best course of action right now? Should we be heading for the hills, or is there a way to navigate this uncertainty?
Well, if we distill the briefing down to its core message, it seems to be, don't panic. Volatility is a natural part of the market cycle. The key is to stay informed, stick to your long-term investment strategy, and make sure your portfolio is diversified to weather the storms.
Easier said than done, right? But, the briefing mentioned something that could be a real game changer for investors, especially for those of us who aren't financial wizards. They highlighted their equity AI platform, which uses artificial intelligence to provide real-time insights and even predictive analytics.
That's right. It's a perfect example of how AI is starting to democratize access to sophisticated financial tools. Imagine having a virtual financial advisor in your pocket helping you make informed investment decisions based on your individual goals and risk tolerance.
It sounds almost too good to be true, to have AI doing all the heavy lifting while we sit back and watch our portfolios grow. But seriously, it does seem like AI is going to play an increasingly important role in the world of finance.
There's no doubt about it. AI is already being used by institutional investors to gain an edge in the market. Tools like Equity AI have the potential to level the playing field and give everyday investors access to the same kind of sophisticated analysis.
It's a pretty exciting time to be an investor, even with all the volatility and uncertainty. Who knows, maybe we'll all be relying on AI to manage our money in the not-too-distant future.
It's certainly a possibility, but even with the rise of AI, it's crucial to remember that human judgment and intuition still play a vital role in investing. AI can provide powerful insights, but ultimately, it's up to each individual to make the final decisions.
Well said. All right, we've explored the market jitters, delved into global trends, and even pondered the future of investing in the age of AI. But before we wrap up our deep dive, there's one last thought-provoking question from the briefing that I think we need to address.
I'm all ears. What's got you thinking?
The briefing ended by talking about how equity AI can help investors navigate turbulent times with confidence. But it also got me thinking about the bigger picture. Is this the future of investing? Are we all headed towards a world where AI is calling the shots in our portfolios?
That's a question that deserves a deep dive all on its own. The potential of AI in finance is vast, but there are also important ethical and practical considerations to keep in mind. Exactly. Like who's ultimately responsible when an AI makes a bad investment decision?
Right.
And how do we ensure that these AI systems are fair and unbiased, not just reflecting the biases of their creators?
Those are the million-dollar questions, and they're ones that we need to be asking as AI becomes more deeply embedded in our financial lives. It's crucial to have a thoughtful and nuanced conversation about the role of AI in investing, making sure it serves to empower individuals, not replace human judgment altogether.
It's like we're at a crossroads, and we need to choose the path that leads to a future where AI and human intelligence work together, not against each other.
Well said. And I think that's a perfect segue to the final part of our deep dive, where we'll bring it all back to you, the listener, and explore what these insights mean for your personal finances.
All right, so we've covered a lot of ground today, from those market jitters and the global trends to the rise of AI and everything from, drug development all the way to investment strategies.
Yeah.
But now let's bring it all back to you, the listener.
Okay.
How can you apply these insights to your own financial journey? One of the most important takeaways from this briefing is the emphasis on volatility. The markets are sending mixed signals, and it's crucial to have a solid financial plan that can weather the storms.
It's not about, trying to time the market or chase the latest trends.
Right.
It's about having a strategy that aligns with your long-term goals and helps you stay the course,
Exactly.
even when things get a little bumpy.
Whether you're saving for retirement, buying a home, or just trying to build a financial safety net, having a clear plan is essential.
Right.
And that plan should include a realistic assessment of your risk tolerance.
That's a really good point. We talked about diversification earlier.
Yeah.
And that's a key part of managing risk. But it's also important to know yourself and understand how much risk you're comfortable taking on.
Absolutely. There's no one-size-fits-all approach to investing. Some people can stomach big market swings while others prefer a more conservative strategy. The key is to find what works for you, what aligns with your goals and your peace of mind.
And that's where tools like financial advisors or even AI-powered platforms can be helpful.
Yeah.
They can provide insights, help you build a diversified portfolio, and stay on track with your goals.
Exactly. Technology is playing an increasingly important role in personal finance. It's giving individuals access to tools and information that were once only available to big institutions. It's an empowering time to be taking control of your finances.
Now, before we wrap up,
Okay.
I want to circle back to something we touched on earlier. Those alternative assets.
Yeah.
The briefing mentioned things like private equity real estate,
Right.
even collectibles. As the market gets more volatile, could these be worth exploring as a way to further diversify?
That's a question worth considering. Alternative assets can offer a way to potentially reduce risk and tap into opportunities that aren't directly tied to the stock market. But it's important to do your research, understand the risks involved, and consider whether they align with your overall financial goals.
So it's like adding another layer of strategy to your financial game plan.
Exactly.
It's not just about stocks and bonds anymore. There are other avenues to explore, and the more you know, the better equipped you'll be to make informed decisions.
Knowledge is power, especially when it comes to your finances.
Well said. So as we wrap up our deep dive into the Pantheon AI Morning Briefing, let's leave you with this. Stay curious, stay informed, and stay engaged with your financial well-being.
The markets might be unpredictable, but with the right knowledge and a sound strategy, you can navigate the ups and downs and stay on course to reach your financial goals.
Couldn't have said it better myself. Thanks for joining us on this deep dive. We'll be back soon with more insights and analysis to help you stay ahead of the curve. Until then, happy investing.